Howdy, everybody. Welcome to Liberty Call. Today is Tuesday, July 9th, 2024. Hope you're having a fantastical day out there in the interwebs. It's a beautiful day here in Colorado. I don't think there's a cloud in the sky. Well, maybe one way over there to the north. But it's a beautiful day here. Hope you're having a fantastical day. If you're down in Texas, it's probably quite warm because you're probably without power, at least if you're in the Houston metropolitan area. So hope you're doing okay. I've seen a lot of comments from friends and family and stuff online that they've all survived. And like my part of the world in Houston, looks like they got about 8 or 9 inches of rain. So nothing too terrible. I think most of it was just a lot of wind and down trees and fences and stuff like that. So anyways, all right. Well, I'm glad you're here at the Liberty Call. If it is your first time watching, if you could do me a favor, give me some thumbs up, a like, a share, subscribe, a follow, and press the notification bell. All right, let's get into today's markets. Dow Jones was down 0.13%, 52 points, closed at 39,291. The S&P 500 up 0.08, 4 points, closed at 55.77. I think that was a new record. NASDAQ up 0.15%, closed at 18,430. The VIX up 0.97% today. It's at 1249. Canada down 0.38. Brazil up 0.45. And Mexico up 0.78. All right, headed over to Europe. Germany was down 1.34%. The UK down 0.2%. France down 1.56%. The Netherlands down 0.23%. Spain down 1.12%. Italy down 0.53%. Switzerland down 0.07%. And Portugal down 0.08%. Russian exchanges both red again today. The MOEX down 2.51% and the RTSI down 2.33%. And the Asian markets, the Nikkei in Japan was up 1.92%, Australia up 0.86%, New Zealand up 0.69%. In China, the Shanghai was up 1.26%, the Shenzhen component up 1.68%, China A50 up 0.99%, DJ Shanghai up 1.31%, the Hang Seng flat at 0%, and the Taiwan weighted up 0.09%. All right, so looks like Asian markets strong. Western Europe down, and the Americas kind of flat. If you look at the the minute by minute of the market, it just kind of was flat most of the day. So, all right, let's get over to the market recap for today. S&P 500 gives up some gains after hitting fresh all-time high on Powell testimony. All right. S&P 500 pulled back slightly after hitting a new record high on Tuesday, with losses contained following the Federal Reserve Chair Jerome Powell's testimony, which kept investors optimistic about a potential rate cut in September. Keep hope alive, folks. Powell noted that the job market had returned to pre-pandemic levels, indicating that the economy was no longer overheated. He also mentioned that that positive economic data in the upcoming months could increase the likelihood of a rate cut. Positive data for a rate cut is actually negative news. That means that jobs or unemployment is going up, spending is going down. Basically the economy is softening. So that's when they say good reports, that's what they mean, bad. All right. However, Powell warned against the risk of risks of maintaining high interest rates for too long, which bolstered investor expectations for a September rate cut. The Consumer Price Index inflation data for June, due on Thursday, is anticipated to provide more insights into inflation trends. The CME FedWatch tool indicated that traders were pricing in a 72% chance of a 25 basis point cut in September, up from 59% last week. The second quarter earnings season is set to start, with major banks like JP Morgan, Wells Fargo, and Citigroup scheduled to report their earnings on Friday. Other notable companies reporting this week include PepsiCo and Delta Airlines. Analysts predict a 10.1% increase in aggregate earnings per share for S&P 500 companies in the second quarter, up from 8.2% in the first quarter, according to the LSEG IBES data. All right, moving further along, tech stocks continue to perform well, with Intel and NVIDIA both rising over 2%, driven by growing confidence in artificial intelligence. NVIDIA's stock increased more than 1% following KevBank's price target upgrade from 180 to 180 from 130, citing a rising AI demand. Tesla saw a 3% gain as Morgan Stanley reiterated its overweight rating, highlighting the EV maker's 15% share in the global battery electric vehicle market in May. Despite the market's slight dip, optimism remained strong, driven by expectations of a rate cut and robust earnings growth. The sentiment is further fueled by positive developments in the tech sector, particularly in AI and electric vehicles, positioning companies like NVIDIA and Tesla favorably for future growth. Yeah, with all the hope and praying that the Fed is going to lower rates, but there at the end, they talked about, how earnings are really, really good. So again, if earnings are good and the economy is running, considered strong by the morons out of Washington, why would we lower rates? I mean, yeah, you could lower them 0.25%, big deal. But I mean, for these people who think rates are going to go back to zero, I mean, short of a calamity or a black swan or something really, really negative, which I think is probably in our future at some point, I don't see the Fed, blasting rates down to zero and printing a bunch of money and, giving us that heroin or sugar high that we're so, so used to at this point every time we hit a bump in the road. All right, next up, some inside baseball news. A stellar 3-year auction stops through with highest bid to cover since January. All right, so let's read some details here on the latest Treasury auction. All right. Federal Reserve Chair Jerome Powell's dovish comments and expectations of a soft consumer price index for the third consecutive month contributed to a strong Treasury auction for $58 billion in 3-year notes on Monday. This auction marked the beginning of the week's coupon issuance, which will include 10-year and 30-year sales in the coming days. The high yield for 3-year notes was 4.399%, down from last month's 4.659% and the lowest since March. The auction stopped through when issued yield of 4.407% by 0.8 basis points, the largest stop through since March. The bid to cover ratio was 2.667, up from 2.443 in June, and the highest since January, significantly above the six auction average of 2.570. The auction's internals were robust, with indirect bidders, often foreign buyers, taking 64% of the issuance, slightly below last month's 64.1% and the recent average of 65.2%. Direct bidders, typically domestic investors, were awarded 21.2%, the highest since December, leaving primary dealers with just 14.8%, the lowest allocation since March. The strong auction performance contributed to the decline in 10-year Treasury yields, which fell to 4.31% after reaching session highs of 4.33% earlier today. All right, so that's some, good news. People are buying up government bonds or government debt. 3 years bill note. So anything under 2 is a bill. Anything from 2 to 10 is a note, and anything 10 years or over is a bond. There's some of your Series 7 learning. All right, let's get on to our next article here. What is happening to incomes? And this is authored by Jeffrey Tucker via the Epoch Times. Jeffrey Tucker, in an article for the Epoch Times, discusses the troubling impact of inflation on daily life, using his personal experience with skyrocketing grocery prices as a starting point. He highlights the doubling of prices of olive oil over the 3 years as a microcosm of broader economic issues, emphasizing that inflation is eroding purchasing power. Despite the stability and customer focus of his local grocery store, the owner confirms that price increases are driven by supplier costs, not increased profits. Tucker argues that the real culprit behind rising prices is inflation caused by excessive money creation by central banks. Who else has said that? Oh, wait, it was me. This inflation affects different products in unpredictable ways, a phenomenon known as injection effects, leading to sporadic and uneven price hikes across various sectors. The author notes that inflation is difficult to measure accurately due to its sporadic nature and limitations on traditional metrics like consumer price, the consumer price index, which excludes taxes, interest, and insurance, and new fees. Shadow stats, an alternative measure, often shows inflation rates much higher than official figures. And there's actually a chart here, right there. So if we zoom in, there it is. There's the chart. So you can see the blue line is the shadow stats measure of inflation using the 1980 formula for valuing and or coming up with the inflation measure, and the red is the current. So you can see where right now we're 3% ish. Up here we're over 10. I'd probably say that's around 13, and it peaked out probably around 17, 18, as opposed to the 9% that we had at the peak. So definitely some interesting stuff. Tucker also highlighted the disconnect between wages and inflation. Despite nominal wage increases, real income has likely not kept pace with inflation, leading to a declining standard of living. He points out that while businesses can pass on increased costs to consumers, employees struggle to secure wage increases amid rising costs. The economic strain is evident in personal and business contexts, with businesses facing higher costs for repairs and equipment, and individuals struggling with higher living expenses. The disconnect between official inflation statistics and personal experience fuels public distrust in government reports. No, really? Tucker estimates that inflation over the past 3 years has ranged between 35 to 50%, suggesting a significant decline in the value of the dollar and national output. He concludes that this prolonged period of economic decline, masked by inflated stock market gains, has eroded the standard of living for many, contributing to widespread public dissatisfaction and a sense of economic disillusionment. I would not disagree with anything that Mr. Tucker said. It is, the government prints money to pay for all their wants and needs and bribes that they give out to the populace and the wards of the state. And you and I, the productive members of society, are the ones who lose our buying power through the devaluation of our dollar. So, anyways. All right, some more, another article here, crapping on the economy. It comes from the Mises Wire. This one's titled, "It's All MMT, the Fraud of Monetary Policy." And this was written by Joshua Mawarder. So let's see what he had to say. Modern monetary theory, MMT, remains controversial and largely unaccepted by mainstream economists, including those from Keynesian, monetarist, and Austrian schools of thought. Despite the radical claims, MMT shares foundational assumptions with other economic theories, particularly the belief of necessity of monetary policy managed by a central banking monopoly. Former Federal Reserve Chairman Alan Greenspan echoed an MMT-friendly sentiment by asserting that the U.S. can always pay its debts by printing more money. Yeah, that's a smart scheme, thus eliminating the risk of default. However, this overlooks the broader economic distortions caused by such monetary manipulation. MMT's critique extends to the shared assumption among mainstream economists that the central banks should control the money supply to promote economic stability and growth, a premise that both MMT and traditional economic theories accept. Mainstream definitions of monetary policy, like those from Investopedia, emphasize the central bank's role in managing the money supply to foster sustainable economic growth. This control, often referred to as a weapon, can indeed be wielded by the state to influence economic outcomes. However, inflation, driven by artificial money and credit expansion, transfers wealth from the general public to the government and political connected entities, creating various economic distortions. Critics argue that MMT merely takes the logic of mainstream monetary policy to its extreme, suggesting that increased government spending, debt, and monetary intervention could unlock greater economic wealth. Well, if you've looked at the last 30 years, all you can see is that we've lost a lot of buying power. Vehicles that you could buy for under $30,000, back in the late 90s. Today, a quarter century later, are double and triple that. So I would like to have the cost of things go down. That'd be great. All right, where were we? However, mainstream economists often fail to deliver fundamental critique of MMT because they share core assumptions about the legitimacy and necessity of monetary policy. This inconsistency undermines their critiques and highlights the fundamental agreement between MMT and other economic theories on the role of government in monetary matters. MMT proponents, like their mainstream counterparts, view money as a policy instrument to be used by government elites to reshape the economy. This perspective has led to decades of debates on how how to best implement monetary policy despite its inherent flaws. Historical failures, such as policies including those leading to the Great Depression, underscore the need to reconsider this very concept of monetary policy. F.A. Hayek's critique of stabilizing monetary policies highlights the ongoing harm they can cause, suggesting that a complete overhaul of these approaches is necessary for genuine economic stability. Again, wholeheartedly agree with Mr. Mawwarder there. So, all right. Well, that's everything that I had for today. If anyone needs anything from me, please go to DSAFinancialGroup.com. All my contact information is there. If you need to book a meeting to get your financial crap together, give me a buzz. I'd be happy to help. All right. Well, that was everything. That was everything that I had for today, and I hope everyone has a wonderful evening. Those in Houston, hopefully you're drying out and get your power back on, get your air conditioning back on, make sure your food doesn't go bad, and hope everyone has a terrific evening. So I'll talk to everyone next time. Adios.